On today's show, 3 questions. Number 1, what's a carry trade and why did it crash the Japanese stock market? That's 2 questions, Rabih. Number 2, are dolphins better at saving for retirement? And number 3, should you own silver? Let's go. Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Victoria.
And I'm Rabih.
What you guys don't know that we are now going to tell you is that was our third try at this intro today.
Take
That
3.
Third time is the charm. We are here to tell everyone and
That we're professionals.
that we're professionals here. That was our third try. We had first mic issue for me, did the whole intro, mic intro for Victoria, did the whole intro, had to stop, and then third time, I think we're here. We have made it. We have arrived. Welcome, everyone. We're excited to be here on this wonderful August. Unbelievable that it's August.
Yeah.
Friday. I guess you're going to be listening to this on Saturday. Either way, happy to be here. Rabih, let's jump into, you snuck in an extra question, my friend.
I know. I couldn't. The topic is so good. I had to share some of my nerdiness with you. So
we're going to let it slide
joining along. Yeah.
Because you are you, and we're going to let it slide. Anyone else? No bueno. Can't have 2 questions. Rabih can always have as many questions as he wants.
Well, I'll promise you will not be disappointed. If not disappointed, at least you'll learn something new.
I love this. I love learning something new. So let's go to what's a carry trade and why did it crash the Japanese stock market?
Okay, let's start with the story. So once upon a time, last week on Friday, we got data regarding unemployment. It ticked up to 4.3%, and the market kind of had a shift in narrative. They wanted the Federal Reserve to start cutting rates earlier. So this just sets up the environment to be very susceptible for any bad news and have it overreact whenever bad news shows up. To give you some background, since inflation started showing up in 2022, different economies around the world decided to deal with it differently. Most of the developed world, except Japan, decided to start increasing interest rates. The US reached all the way to 5.5%. Whereas Japan decided to keep it at 0.1%, aka zero, just because of different demographics, the way they execute monetary policy by controlling the yield curve, etc., etc. However, given the U.S. market reaction on Friday, investors started, noticing and factoring in the idea that the Federal Reserve is going to be cutting rates. Also, on July 31st, the Bank of Japan decided to increase interest rates for the first time. And it increased it from 0.1 to 25 basis points, so 0.25%. So if you think of it, the spread, the difference between the interest rates that you receive in the US and the interest rates that you receive in Japan are different. And the fact that now are wider and now they are shrinking, the spread is, becoming narrower between these two. The fact that they were different actually had a lot of implications on the economies. From a consumer perspective, we always said, hey, if you want to go to Japan, this is a great time to do it simply because of the currency exchange.
I did not follow your advice. I did not go to Japan.
I didn't go to Japan either. But honestly, now opportunity wasted, and we'll go about it in a second. But the currency was at the lowest it has been for 37 years vis-a-vis the US dollar. So it was super cheap to, fill your belly with sushi. It was great, but not anymore.
Because you're saying comparing the price of the Japanese yen to the US dollar, it was the most the largest kind of like difference in price.
Yes, the US dollar has appreciated vis-a-vis the Japanese yen to the highest point in 37 years, where I don't know, a dish of sushi might have cost you $20. Now it's maybe 14. I'm craving sushi on a Friday morning.
Yeah, oh my gosh, we gotta get sushi for lunch today now.
Someone knows what they want for lunch.
All right. So that was from the perspective of the consumers. But for the investors, it also created a really good opportunity. Japanese interest rates were 0, but US interest rates were 5%. So if you're a savvy investor, what you would go and do is that you would borrow in Japanese yen and with the promise to pay it back a year later at 0% interest or 0.1, take those yens, convert them into US dollars, and invest them in US treasuries and make 5% on them. 5.5%. This is called the carry trade. You take one currency, you borrow it, you convert it to a different currency, and you invest in the country that provides a higher interest rate. And everyone was doing it. Like every institutional buyer, we're not talking about, a dentist in Utah doing it. We're talking about investment banks, hedge funds, etc., etc.
Large institutions.
Warren Buffett was playing that one. So the big fish in the sea. Going back.
Here you go back with
My
fish.
God, Rabih.
Golly.
That was unintentional. Yeah, I'm hungry.
The big salmon in the
big salmon
with the
in
eel
sea.
sauce, and the crab, the fresh crab in the ocean
was actually enjoying that carry trade. But this has a second order effect and the third order effect. When everyone does it, what they're doing, they are borrowing from Japanese pounds, but then they are converting their yen to dollars. When you do that, you are selling yens and you are buying US dollars. When you sell a currency, it drops even further. That's why it was cheaper to, again, get sushi.
because so many large institutions were doing this with such large dollar amounts that it was driving the price down.
The currency down. And when the currency is down of a certain country, it's very beneficial for its firms because now they can export more. So the fact that the yen was even cheaper attracted equity investors, not just investors who wanted to play the carry trade of transferring getting one interest rate from another by borrowing from the other country. So given that the yen was depressed, a lot of investors flocked into the Japanese stock market and they started buying Japanese stocks. And if you noticed, a year ago, we said that the Japanese index finally hit an all-time high since the 1980s crash. It took them 30 years to make it, but they finally hit. And that was because of all the influx towards Japanese stocks. So now you've got two major sources of revenue for the financial sector simply by the fact that there's an interest rate differential between developed countries and Japan. On one hand, on the fixed income side, everyone was playing the carry trade because there's a 5% spread that you can make by simply just borrowing and investing. And there was the idea that equities are now worth more because for a foreign investor, your international return is a combination of the currency return and the actual stock return. And given that the Japanese yen was down, the fact that it might be appreciating up added an extra layer of attractiveness to buy Japanese stocks. Enter Monday. And
this isn't going to end well. Everything you just said,
I know.
This is not going to end well. When everyone's loving and riding that wave, it's like this is going to come crashing down.
Exactly. And this is what happened. Enter Monday, the market decided that, it's about
the sushi
time.
had gone bad.
Sushi has gone bad. It's about time to unwind that trade. Because I don't want to be the last person to do it, because if people do it before me, I might be losing. So I need to beat everyone else. There was a herding reaction. It's more of a bubble bursting. And people started selling out of their Japanese stocks, buying back the Japanese currency, and
driving the yen back up.
Yen back up. So the yen appreciated 13% just on Monday.
Oh,
the Japanese stock market crashed by 12% in one day, the largest since 2008 for them.
Wow.
And by the time the US stock market opened, because Japan opens like 8 hours before the US or 12 hours before the US, the VIX, which coincidentally we talked about it last week, spiked all the way to 65 by opening time, the highest since COVID-19.
Oh my.
And
we talked last week, if I remember correctly, you said it was a 26.
It was 26. Now
so it went from 26 to 65 in like overnight, basically?
Yeah, and now we're back down to 22. We'll talk about it in a second.
Whoa.
There's more than one layer to it. But when the VIX spikes, it means that everyone is rushing to buy insurance because they are afraid. So it's simply because what happened in Japan happened, a 12% drop in stocks, 13% appreciation in currency. Everyone flocked as soon as the US stock market opened to buy, insurance on their portfolios, on their positions.
You mean they're hedging, basically?
They're hedging because, well, it seems like the Japanese beat them to it, and now they don't want to be losing. So let's buy insurance as soon as we can to limit the effect. Because if you decide to unwind the trade, right? In Matt's example, he decided to sell his equity and then he decided to buy yen. For me, who had the same position as him, if I was too late, Then my equity position, because I didn't sell with him, actually dropped and I took a loss on it. And my short yen position, which appreciated, I also took a loss on it. So that's the, I don't know,
the double whammy.
Yeah. It's like,
they call that.
It's a zero-sum game at that point. Whoever exits first is the one that locks the most gains. So everyone flocks into it. This is what we call a tail event, like a tail risk event. Like there's a domino effect happening when someone's action actually affects the action of another investor. If Matt does it, I'm inclined to do it to cut my losses, etc., etc.
And once that momentum starts, it just builds on itself.
100%.
Yeah.
On Monday, the U.S. stock market also had a bad day. Not as bad as Japan. The S&P fell down 3%, Nasdaq 3.5%, which added on top of like Friday's losses due to, the own narrative the U.S. is dealing with regarding balancing inflation and unemployment. But on the good bright side, a lot of investors thought that, this is an overreaction. This is a good sell-off. Japanese stocks are now actually undervalued. Let's go and buy more into them. And the US dollar is now depreciated vis-a-vis the Japanese pound. So let's go and buy more US. It's fine. So the market was able to absorb it and correct itself incredibly quickly. And this is more of credibility to the feet of the US stock market. Everyone who's saying, the market is overvalued or it's far away from its fair value and investors are not incentivized to act on it just because they're waiting for something to break, that was a test on Monday that the market is functioning very well. If this same event has happened, actually, this is what caused the 1987 crash. This is what caused the tech bubble. It's a lot of...
You're saying the herd mentality.
The herd mentality.
Yeah.
So the fact that such a big event, you're talking between the two largest financial hubs in the world, because who owns the largest amount of US treasuries? Japan. So it's very important. When you look at it, when the two largest players in terms of US treasury are actually to absorb such a bubble that's been for 2 years, a carry trade that's been 2 years unwinding and popping, this is just emphasis on how robust the system is, and this is a good sign. This is a really good sign.
Good.
To take that further, on Friday, because the US market was able to properly absorb the shock and capitalism worked in a sense. Prices reflected what it is.
Yay,
whoever exited,
capitalism.
whoever wanted to enter. Great stuff. The Japanese stock market recovered 10% the next day. And this just speaks to the magnitude of big losses and big gains come together. Good news overall, whoever decided to not touch their portfolio for the whole week and not act on the news and not worry about it, we're kind of flat for the week.
Yeah.
After all the madness that has happened. We're only slightly down in the US, Japan a little bit more, but not something dramatic. And with that, here's the story of the carry trade and why it crashed the stock market.
I love this. A couple of things that I took out of that I want to highlight. Number one, a side comment you made. Well, no, I'll get to that in a second. Number one would be, if there's ever been a better example of how you cannot outguess this thing being the market, look no further than this story. Like, if you're out there thinking that you can, again, outguess the market or time the market or guess what's going to happen in the short term or day trade or play this game, again, look no further than this. You're not going to outguess this thing. You're just not. You've got to play the long-term game to be successful, with investing in the markets. Everyone, as you're highlighting, Rabih, everyone that's playing this game of the carry trades and the short term, the volatility and playing this are all short-term players. It's all traders. They're playing a completely different game. Every time we talk about something like this, I guess this is kind of like the navigating of the noise part of this, which is all of this is just noise.
Mm-hmm.
If you are a long-term investor, which, spoiler alert, every single person listening to this show should be a long-term investor.
Right.
You're not out there. You shouldn't be out there competing with triple PhD rocket scientists who are doing carry trades in the Japanese yen, converting them to the US dollar and buying US treasuries. Like, you're not going to win that game. I guess I'll stop there and get your guys' thoughts on that, if any?
No, I think that's a really good point to highlight that it's a different game. Because I was kind of thinking as Rabih was talking, if there would be people feeling the FOMO from that, like, oh, I should have done this, and it's like, no, you could not have done that successfully, or the odds of you being successful with that are very, very minimal. The risks for that would have been far too great.
Yeah. If you're a dentist chairside all day or managing a practice all day, and then you think you're going to like casually get into a carry trade on the side and like understand what any of this means.
Right.
You're just not. And I love what you said, Rabih. You highlighted that if by the end of the week, if you would have just like not even checked anything, that's the thing. If you were checked out, there might be people listening to this right now that are like, wait, what happened? Huh?
Yeah, and that's
which is a good thing. If that's you, that's a good thing, because all this craziness. I will say, speaking of all the craziness on Monday, which was a carryover from Friday, we had 2 back-to-back market days that were really bad. I only got 2 client calls on Monday, and both of them were positive. Both of them were. One of them was client calls and says, "Hey, stocks are on trade or are on sale. We should buy more." And I was like, oh, that warms my heart. And then another one called and just kind of shared their experience with what was happening, and like truly was kind of like thanking us for, he was just like, thank you so much for giving me perspective. My first reaction was to kind of freak out. And then I just realized I shouldn't be freaking out. And anyway, it was really cool. So those are the only 2 calls that I got. Other than that, silence. No one said anything, which is really cool. The other point I was going to make, that Rabih, you made a side comment that I think is worth kind of highlighting really quickly, which is you said the Japanese market took 30 years to recover. Mm-hmm. It's basically been flat for 30 years. Mm-hmm. Again, if there's ever been an example of why we stress so much to have global diversification, the Japanese market 30 years ago was the market, or at least one of the markets. It is one of the most established, well-run countries in the world. Very developed, and prior to that point, I don't know all the numbers, Rabih, you can maybe, if you know off the top of your head, prior to that point had crushed as far as the market goes.
So yeah, in the 80s, remember the conversation now, maybe not this last year, but a couple of years ago, like China's overtaking the US. They are the next big thing. You need to be invested there. This is what was happening in Japan. I was actually reading Daniel Crosby's book yesterday night before going to bed.
Shout out.
The Soul of Wealth, and there was a paragraph talking about how the Imperial Palace of Japan was valued larger than the state of California.
The entire state of California.
And it is fascinating
yeah,
how big of a bubble Japan was in, and it was related to real estate.
This was the emotions chapter you read.
Yes.
We just talked about this. Yeah, so good. So to that point, a perfect example. That's why I wanted to highlight this, is we're saying from that point to now, it took 30 years for the Japanese market to really recover and get back to a player in the national or in the international game of investing. The entire market for 30 years. So the U.S. had something similar, at least the S&P 500 did, the quote unquote market, 10 years. And so I just think these are always good opportunities to share with people. Like, there are examples where you see established markets that dry up for multiple decades. And so if you're so focused, this is why when someone says, why should I just buy the S&P and stay there? It's like, okay, you could, but it's not optimal. And you're setting yourself up for risks that, like Japan going 30 years flat. So I just wanted to highlight that. I don't know if you guys have any response to that at all.
No, that's good.
Perfect. Okay. Rabih, anything else on any of that? The carry trade, Japanese stock market, anything else?
No, going forward, we've been doing an inflation watch, but going forward, it's going to be unemployment watch much more importantly, because this is what the market is reacting to mainly.
Changing it up from inflation watch to now jobless watch. I like this. All right, Victoria, since we were talking sushi so much, we're talking...
I don't know if that's a good segue.
I mean, go with me. We're talking sushi, animals of the sea, dolphins. You see what I'm saying?
I thought you were going to
Dolphins.
insinuate that we're eating dolphins.
No,
I was like,
no, not eating dolphins. Just like,
horrified for a
where
second.
does sushi come from? It comes from animals of the sea, and
Which don't include dolphins.
don't include dolphin. I've never had dolphin sushi, but we were talking dolphins in retirement. I don't know how you. So I don't know this connection that you have. Are dolphins better at saving for retirement?
Mhm.
I would love to know more about
Yeah,
what you mean.
definitely. Any chance I get to share this study, I will, because I'm a huge animal lover. So I guess to preface, I'll share a couple of dolphin facts. Is that fine?
Please do.
Do you
You've
guys-
never met someone who knows more random knowledge about random animals than this girl right here.
You guys, I think I would have gone into zoology if it wasn't like a money issue. I don't know.
You could actually make some money with it.
You can actually make some money just looking at animals all day. And yeah. Anyways, fact number 1, did you guys know that dolphins' brains are on average, 25% heavier than an average human brain? Bottlenose dolphins.
I did not know that. I can safely say I had no idea.
They're smarter than us. It's crazy. And there's like the complexities of their pods and like rules and stuff, because it's crazy. Like there's some dolphin like I can't remember what they're called, pods. Yeah. Where if there's like a new dolphin, they have to prove that they can do certain things. Like they have little societies and rules, same as people, and they mimic people a lot. They'll mimic their trainers. Like there was this one story in this article I read that a trainer was like smoking a cigarette and puffed it, and a baby dolphin was watching it happen. So it went to its mom, got some milk, and like puffed it too.
No way.
Yeah, and they'll
That's
mimic
cool.
sound. They're very, very intelligent. And apparently there's some cases of like dolphin super gangs, and it's like 20 male dolphins, and they'll just go like
Beat all the other dolphins up.
like beat up the other animals of the
They
ocean.
do? They're bullying?
They're little bullies. Yeah. So basically I like to preface this by saying dolphins are extremely smart. And this study shows that. Because something that I feel like we talk about a lot is delayed gratification, how that's extremely difficult for people. Our brains are wired to be more short-term thinking. Long-term thinking is very difficult. So it makes a lot of sense why we as humans have a really hard time saving for a really big financial goal in a long, long time, right? So there's this famous study done at the Institute for Marine Mammal Studies in Mississippi. I don't know why there's a dolphin in Mississippi. Problem number 1. What were you going to say?
There's just, those two things don't go together.
I know.
The famous study, and then what you just said at the Institute of Marine Biology in Mississippi. I'm like, this study is not famous, but okay.
But okay, maybe the study isn't, but Kelly the dolphin is.
Okay.
So new character unlocked, Kelly the dolphin.
Kelly Clarkson the dolphin. Yep.
Nope.
Okay.
No, just Kelly the dolphin.
Okay.
I love Kelly Clarkson though. I have seen her in person.
Rabih's dying right now.
She performed here in Salt Lake once, and she was like dying because of the altitude here, because we're not quite a mile high, but we're close. Anyways, back to Kelly the dolphin.
Clarkson. Okay. Yes.
No.
Back to Kelly the dolphin.
Kelly
we're
the
here.
dolphin. We're here. We've made it. So at this particular study, they trained the dolphins in this pod to pick up trash in their little pool or whatever to help kind of maintain the pool. So every time they'd pick up a piece of trash, depending on the size of the trash, they would give it to the trainer in exchange for fish. So there was a currency exchange. Maybe not as complex as what just happened last week, but you know,
It was a carry trade.
Parallel.
Yeah.
It was a carry trade, basically,
Yeah.
is what I'm saying. I'm trying to thread the needle on this. I don't think it's working. So anyways, they trained the dolphins to pick up trash. And in exchange, they would get fish. Okay. So Kelly the dolphin, smart little dolphin she was, would store trash under a rock and save it basically for a rainy day. And so she wouldn't give it right away to the trainers. She figured out if she were to save this under a rock, she could get fish whenever the heck she wanted, not just when there happened to be trash in the pool. I'll stop there to see what you guys think about that and continue on.
First of all, super impressive. I had no idea who Kelly the dolphin was, but
yeah,
that's freaking cool that she, you know, I don't even think she listens to our show, and she's still knew. She's still new to just instinctual. That's pretty cool.
Yeah.
She obviously became famous because she was doing this. The other Dolphins were not doing it.
She figured this out. Yeah.
She figured it out.
Yeah.
Did the other Dolphins follow suit?
So she started to teach the other Dolphins, and she started to teach her children how to do this.
Wow.
So she passed down the knowledge. So she also figured out, okay, if I give small piece of trash, that's like one fish. If I get big piece of trash, that's like a lot of fish, right? So she realized there was some value in different pieces of trash. I don't know. I think this is really cool stuff. So, I don't know the connection here, but I love talking about marine life.
I
do. If I can plug in an animal fact on a financial planning show for dentists, I will.
I love this.
So she doesn't stop there. At one point, this is where the story gets a little dark. She decides to murder a seagull that landed in the pool because that was like a big piece of trash. And so then
seagulls are trash. I agree, Kelly.
Yeah. So one day a gull fell in the pool. She pulled it under, and then when she gave it to the trainer, she got like a lot of fish for that. So basically, she figured out there was different values to different pieces of trash, and then she would save it under a rock and use it at her disposal or whenever she wanted. And then she taught the other dolphins and taught her offspring how to do the same thing. And to that I say, that's basically the premise of how to save for retirement, right? It's delayed gratification. It's maybe not saving trash under a rock, but it's like very similar parallels. So I say if dolphins can do it, you can too.
Robbie's got some thoughts. He's been smirking this entire time during this whole thing.
I don't think he's ever loved dolphins more.
Yeah, no, it's.
Isn't it cool? Like
it is pretty
amazing,
cool,
right?
It's amazing. The reason I'm smirking, because like in the US, you've got the stock market, you've got places to put your wealth in, but in other places around the world, you just have to hide your money under the mattress, and the rock is the equivalent of a mattress here.
Yep.
And it's like, this is not too far enough from like how civilization 21st century does it. You just need a dolphin JP Morgan and we're ready to go.
I know. That's like, this is the start of it. I guess also I'll say they started like waiting for seagulls to fly into their, like sit in their pool, and they just started murdering seagulls like left and right. So
dang, that is cool. And you're right. I mean, I think when I think of this story, I mean, all jokes aside, it is interesting. How smart this dolphin is. It's pretty impressive.
Yeah,
but just how
Kelly. This was 20 years ago, by the way, this study.
Yeah. It's just like you said, we talk about this all the time. Like a lot of times success is just, it is most of the time just so simple. And, we liken this to what you're saying when it comes to humans and saving for retirement. It's oftentimes more simple than we want to give credit. And I read a quote recently, something to the effect of, people don't like to hear about simple solutions because it often leads to, or it often requires behavior change. We don't like the simpleness of a solution that we offer, like on this show. It's like, a lot of things we say are just, again, simple. I think people want something more complicated because it is usually, the complicated answers are usually outside themselves. It's, if I just would have known about that carry trade in Japan, or if I would have just known about this one strategy or this one thing, it's deferring responsibility from ourselves of just saying, no, this is actually pretty simple. It's accountability, it's time, it's delayed gratification, it's being diversified, it's sticking to something for a really long time.
Yep.
So I love that. I think, did we land the plane? Did we land the dolphin plane?
Did we
swim
the dolphin?
Did we land the dolphin in the pool?
Ocean.
I don't know. That was great. Honestly, I did not know. I think now that you tell this story, I think I remember you talking about this at some point.
Yeah.
Like just in the office a while ago. I lose track because of all the animal stuff you talk about.
Yeah.
So
sorry.
No, don't be sorry. I think it's great. Again, we'll be just like talking about something with work, and you'll be like, "Did you know that the howler monkey has 3 heart chamber?" Like just some random thing, and I'll be like, "I did not know that." I
They
did not
sure
know.
don't, but you can hear them from a mile away.
Of course. Here we are. Okay, that was awesome. Dolphins, it sounds like maybe better at saving for retirement than humans. Last question, should you own silver? This is coming from a personal story earlier this week, so not from any news story or anything we saw, but I thought it was a good opportunity for us to talk about. I got I'll say an email from a client earlier this week. Shout out Marnay. I told her I'd give her a shout out. We love you. One of our biggest fans. She reaches out to me and says, hey, is there any reason why we should own silver? And I, with no other context, and I wrote her back and I just said, no. That's all I said.
No.
I said, no, there is no reason for you to own silver. She then told me that the reason she's asking, and by the way, she was not like, she's always just curious. She's really, really curious. And she's not sitting here being like, oh, we should do this. She's just genuinely asking. She's one of those clients that's like, again, she's like, she trusts us. She knows she's sticking to the plan, but she's also just like, I'm curious. So she told me more. She gave me more context. She said her friend's husband doesn't believe in the stock market, which I always love. It's like, you don't believe in like, how do you not believe in the stock market? I don't understand that. And he only owns silver.
Oh.
So it got her thinking. She was just like, that sounds kind of interesting and kind of crazy. Like, maybe I should just ask. So again, I thought we'd bring it to the show and just talk about, like, is there any reason to own silver? Rabih, we've talked about this before. We've done full webinars on this. We've done full podcasts on this. But again, I thought it would be a good opportunity to just kind of highlight, again, just truly highlight the differences between like owning a commodity, which is silver, gold, raw materials, you can be a trader in commodities, versus what it means to own or invest in the stock market. So I'll leave it there for a second and just get your either of your initial responses at all. None. Okay, cool.
No. I'm waiting for Victoria.
You pointed to Rabih first.
No, I didn't. I said you guys.
Oh.
Ladies first, Victoria.
Ladies first.
Oh, me. I guess when I hear that, the first thing that came to mind was, oh, okay, 100% bet on silver. That's interesting.
Yeah.
Because even with our approach, it's not like we're saying like only do the stock market. It's like the stock market and real estate and your business, right? I think I just get really curious as to why, 100% bet on silver and what's the track record compared to the stock market.
Yeah.
I don't know. It's just fascinating to me.
I agree with you. I always find it interesting when people say, I don't believe in the stock market, which I hear. I hear this in my personal life. I hear this like situations like this. It's always, I don't believe in the stock market. And to your point, I only believe in this one thing.
Yeah.
Like, I only believe in Bitcoin. I only believe in silver. It's like, it's just I agree with you. That's an interesting concept there of like, I'm going to only go in on this one thing because I don't believe in the stock market. Like, for example, if a dentist told me, I don't invest in the stock market, I actually would rather allocate all of my funds to build up my business and start multiple practices. And my path to wealth is going to be building up 10, 15, 20 locations and eventually cashing out and selling to a large corporate group. That's okay. Like, that's a big bet that you're making, but I would much rather you do something like that than being like, I don't believe in the stock market. I'm going to go buy silver and see what happens.
Right.
So I agree with you on that. The other thing I'll say really quick, Rabih, you and I talked about this, the one thing that I think is so interesting is, and by the way, my client did not do this. Like, this is not her, but this reminded me of situations that come up where people will reach out and say, hey, should we be doing an X, Y, or Z thing? Because of, I heard about it from this person. And what it always is in most cases is one person removed. So it's not like my friend told me about this. It's like my friend's husband or my friend's friend does this. It's like someone they don't really know that they kind of just like heard. So there's like some level of mystery to it, but it still feels like personal enough to be like, oh, maybe I should do that. Yeah. And like creates this kind of interesting FOMO. It's just the human psychology behind that is kind of interesting.
Yeah, there's the allure of the other, and the fact that they are kind of mysterious. I don't know how, but it gives them credibility in some some way. We need,
Yeah.
like,
Yeah.
your best friend could be Warren Buffett, but if there's that other guy who bought Bitcoin, then who cares about what your best friend thinks?
Yeah.
Right.
I don't know how just being mysterious adds to credibility. I think it's a bias,
Yeah,
and
it's
we
interesting.
fall through that trap. But Matt, to your point about the trust, like, I don't trust the stock market and I don't believe in it, so I'm just gonna put it in silver, etc. Uh, Mainly, it's just that how things are tangible. Like, you can see that a piece of silver or a piece of gold is a tangible thing right there. It has stored value for a period of time, and just our whole economy, our whole currency, our whole way companies provides goods and service is based on the trust that they are doing something that creates value for both them and us, and that's where the value is created. And I don't know, can I be opinionated? But if you do
Please.
not believe in a currency or believe in a stock market, which is a simple transaction based on facts, it says more about you than the stock market.
Yeah.
So
Yeah.
with that, as for silver versus the stock market, or your business and practices versus the stock market, it goes down to the basic definition of an asset, and whether that asset is income producing or it is not. With a business or with a stock market, the thing you're investing in has something internally that promotes its growth. It's not dependent on simply someone buying it from you or selling it at a higher price. There is an element, like if you hold the stock and it gives you 10% return, let's say 10% dividend return. The stock might not go anywhere, but it gives you a 10% dividend. You're going to be making your money back in 7 years. So the idea is there's something internal about it that gives you your money back. With commodities, simply commodities are used as raw material in a lot of our goods and services. They do not have anything intrinsic. If you put a block of silver under a rock with a dolphin, it's not gonna increase in weight. It's gonna be
You
as
get
is.
no fish for that. You might get a lot of fish for that, actually. Who knows?
So intrinsically, it does not compound. The only way the price of gold or the price of silver changes is if there is another buyer willing to buy it at a price larger than the price you paid for it. And that's why you worry, because what if there's no buyers? How do you get out of it?
Yeah. It's kind of this whole, like, you're relying on what they call like the greater fool theory, right? Is like, I'm just hoping that there's a greater fool out there than me that will eventually buy this at a large or at a higher price. But silver produces nothing, to your point, Rabih. And just to come back to this point really quick, and I think it bears repeating, like when people, like you said, people say they don't believe in the stock market. I know what they're saying. They're saying, like, I don't believe in it as like a true source of like being able to create wealth. I see this a lot, like on social media, people like trying to sell you a course on like, hey, I have a better answer. Like, the stock market doesn't make anybody rich. It's the biggest lie ever. I'm going to say, I think the stock market has made more people rich than any other asset class ever to exist.
Yes.
But I think if you really boil it down, like, what is the stock market? It, like you were saying, Rabih, what is the belief there? The belief by investing in the stock market is all you're saying is, I believe that over the course of time, more people than not are going to continue to wake up tomorrow and continue to want to make their lives better, the lives of their families better, the lives of their community better. Even if you go full Adam Smith, the core Adam Smith, and you're like, everyone's self-interested, great. That still drives that market forward, because even if you're purely Adam Smith self-interested, it's that you're still going to wake up and be self-interested for you, your family, and producing a product or service that people are going to want to buy so you can make a profit. That's all it is. So when people say, like, I think the stock market's going to crash or this is over, it's like, you are literally saying that all of society is done.
It's gonna stop. Yeah.
It's all done.
Right.
So I wanted to highlight that when we're talking about like stock market versus owning silver. That's a huge piece. Or when I hear someone say, I don't believe in the stock market, it's like, let's really break down what you're saying.
Yeah.
To not believe in the stock market's like saying you don't believe in that building right there. Like, it's kind of crazy. So anything else on that, Rabih, or Victoria, the difference, like silver, I guess, truly, should you own silver?
Actually, when you mentioned it, I was looking at some just return numbers. I'm looking around. Let's do year to date. It seems like year to date silver has done 15%, whereas the stock market has done 10%, and uh, this is part of the reason why now we're hearing about silver. I looked at the data on the past 3 months and 6 months. It has outperformed the stock market and gold, but over year to date, not gold, but yes, the stock market over a year, 3 year, 5 year period, stock market and gold have outperformed silver. So the idea is like, why silver right now? Why we weren't asked about copper? Why weren't we asked about gold? We were asked about silver. It's just the usual momentum effect. When something outperforms, people are going to ask about it.
Yeah.
We deal with this every single day.
Yeah.
It's the hindsight bias.
Yeah.
It's, oh, I should own that thing because it's done better than this other thing. Right. Is it safe to say, though, anyone out there, like, you trade commodities, you don't really invest in them? Like, you can, like, most people, again, we're talking about the long game, you should be investing in the stock market, not trading it. Commodities, there's no real, like, investing in them. The players in the commodity game, silver, gold, whatever else you want to call it, copper, whatever, they're trading. They're playing a much shorter term game. Is that fair to say, Rabih?
It is, as the only source of return is from supply and demand.
Yeah, that's it. Yeah, no production of anything. Okay. Hopefully we answered that. It gave some clarity to that. My answer, short answer is no. There's really no reason to own silver. There's a whole other discussion around this of like people saying, oh, it's a hedge against inflation. I think that's kind of been debunked. This whole idea that gold and silver are some consistent hedge against inflation. That's just not true. Rabih, do you have any thoughts on that specifically?
Yeah, the only thing that hedges inflation is inflation-protected securities that give you a real return.
Stocks, like stocks?
No. Stocks, gold, real estate, etc. are not inflation hedges. The reason people think they are, because over time, especially stocks and real estate,
they outpace
inflation in their return. But for it to hedge, it means that if inflation ticks up by 1%, the value of your portfolio have to tick up by 1%. There's no perfect inflation hedge unless it's an inflation protected security. You should be in an asset that outpaces inflation. Would you rather be an asset whose only source of return is supply and demand, or would you rather be an asset that also outpaces inflation, whose source of returns are supply and demand and an intrinsic income generating process?
There you go. Okay, love it. Any final thoughts around any of this? Carry trades, Dolphins, or silver?
I'm ready to have some sushi.
Yeah.
Rabih's ready to eat.
Yeah. Okay. Well, that was great. Thank you guys, as always, for being here, Victoria and Rabih. If you're out there listening and you want to talk to us, we'd love to talk to you. We'd love to hear your story. We'd love to answer questions that you have, talk about anything we talk about on the show, or just mainly talk about you, your life, how we may be able to help you, just point you in the right direction, help you figure out what's going on with your personal situation and how we might be able to add some value. We'd love to, again, talk to you about that. Go to dentistadvisors.com, click on the yellow book free consultation button. We'd love to talk to you. But for now, that was our 2 cents. Till next week, have a good weekend. Bye-bye.